So they falsely don't report their true income. What does that mean? Means that, let's say they make 300K. They'll only report 150 or maybe 100K. What happens? When you say you only make 100, but your bank statements say otherwise, or even if you have cash that says otherwise, you're actually violating the tax law, which will cause you other issues down the road. But at least in the immediate issue, you want to make sure that you show as much of your income as possible so you can qualify for the maximum amount of funding. Okay. Now, most people would say, well, I don't want to owe the IRS all this money, right? And they're afraid of that. But I'll give you a different way of looking at it. Let's say you have 150K in income, and let's say the IRS says you owe $50,000 for, let's say, 2024's taxes. And then let's say you had a similar amount, maybe a little bit less for the previous year's taxes. Okay. What happens is, if you say that, you made this amount of money and you don't, you may take some of your expenses out as a business owner, you may have some deductions, but you may not put all your deductions in there. Typically you're going to see a much higher approval rate when it comes to lending. If you go and you take all the deductions out, right, you're going to have a hard time getting approved from any bank anywhere for any large amount of money.